Hello, everyone, and welcome to the Main Street Finance YouTube channel. As you can see, I am no longer just recording on my iPad. I decided to invest a little bit more into the show so that we can provide some better refined content for all my viewers and listeners out there. So, on today's video, I wanted to go over the most common stock metrics that you'll see when using sites such as Yahoo Finance or CNBC to research companies or funds that you're interested in purchasing or adding to your portfolio. To save everyone a little bit of time, this video is not going to have the most detailed information on these topics. Rather, the purpose of this video is to introduce these topics so that you kind of have an idea of what you're looking at. There's going to be an upcoming episode in the podcast where I go in depth to teach the fundamentals of these topics, so stay on the lookout for that. So without further ado, let's take a look at Yahoo Finance and see what information we get when searching for companies on these sites. So personally, I like using Yahoo Finance. They use, as you can see, they have ads everywhere. Almost everything down here is an ad. They just kind of mix them in left, right, and sideways to make it look like they're fake. You can see a couple things that I've been looking at recently. So none of this is really what we want to look for. So we want to look up individual companies. So we're going to go up to the search bar up here. So you can search for companies or symbols. So just for fun, let's go ahead and let's do Walmart. Walmart I use as my normal example because everyone knows Walmart. Everyone knows what they do. It's pretty easy to understand. So what we could do is type in Walmart, and I just see we have Walmart Incorporated and then WMT here, but then you also notice that we have all kinds of different options here. Well, the reason for that is Walmart is listed on several different stock exchanges, so because of that, they have different codes for it. So you see you have WMT, WMT.MX, all this other stuff, and you notice over here we have equity and then a bunch of symbols. So these symbols are which stock exchange you want to look at it on. So we want the American Stock Exchange. You see the NY for New York. And then it's also one that doesn't have a bunch of dots and whatnot behind it. Alternatively, if you knew the ticker symbol of a company, you could just type WMT. And here we go, we get the same options. So let's go ahead and click into there and let's see what we get. Well, it looks like the first thing we get is a slow internet connection. So this is the homepage for Walmart, just to kind of see what you get. So we have summary, you have a company outlook, charts, conversation statistics, you guys can read. So what I wanted to cover mostly are what are these things here and these charts and performance outlook. So just the basics. So you kind of know what you're looking at when you're looking at these companies. So let's go ahead and start up here. So I am recording this on a Saturday. So what that means is the market is not currently open. And because of that, it's going to show the ending information for yesterday, which is Friday, or the most recent time that the stock market was open. So previous close. So previous close just means the day before, the day it's showing you, what was the final closing price. So as you guys know, as long as the stock market is open, prices are going up and down depending on supply and demand of the buying and selling of the stock. The closing price is the final price before the bell rings and they say, okay, that's it, no more trading today. So because this is a weekend, because it's Saturday when I'm looking at this, all this information is based on Friday. So this previous close means that's Thursday's close. This is for Thursday. So Thursday, it closed at 1:30. Now the reason it shows us this is so that we can compare this number to this number, which is the current price as of right this second. So we know Thursday ended at 1:30, and then Friday ended at 129.40. So whatever happened Friday caused the stock price to drop. So that's really all we need that for. Then we have the opening price. That's going to be today's opening price. Now you might be asking, well, shouldn't the Thursday closing price and the Friday opening price be the same thing because there shouldn't be trading that happens in between? In general, you're right, but there is such thing as pre-market trading, which is the stock market typically opens 9:30 in the morning Eastern time in New York. So for about an hour and a half before that, people with certain access to the system can go in and do trading before that. So this is the effect of, okay, so from Thursday's close to Friday's open, the pre-market trading had the price drop. So that's really all you really need to read into there. In general, it really doesn't matter because you're looking at today's price movements, and today's price movements don't matter because if you're buying these stocks, you're going to hold them for years. What the stock price did yesterday versus today shouldn't really factor too much in your decision. Next, we have the bid and ask prices. That you really shouldn't care too much for. So all of these stocks are traded by the brokers. The brokers do business with dealers that go through, and typically brokers are also dealers. So they buy and sell the stocks in bulk. So the bid price is the price that the dealer is bidding or is offering to purchase that amount of stocks. Now, they don't trade stocks one at a time. They do them in bulk. So what this is saying is that, so the bid price, this is from the perspective of the dealer. So the bid price is what they would bid to purchase those shares from you. So this is the highest price you could be offered for these shares. So they will offer you $129.35 for 800 shares because they do bulk. They don't do 2 or 3 shares at a time. The flip side of that is the ask price. So if you're trying to sell these to the broker, they will sell them to you at $129.46 for 1,100 shares. So they want to sell you more than what you gave them. Now, if you're an individual investor watching this and you're not with a hedge fund, these two numbers really don't matter. It really just doesn't do much for you. Next, we have the day range. And the day range is just simply from the time the market opened to the time the market closed, the day that you're looking at this. So this is Friday. So Friday, the lowest price that Walmart went throughout all the ups and downs of the day. So if you're looking at our one-day table here, see how there's a lot of ups and downs in here? So the absolute lowest price, which is probably about right there, probably somewhere in there, is 127.62. So just in the 9:30 a.m. to 3:30 p.m. period, the lowest the stock price went was 129.72. The highest it went was 130.09. So that was probably somewhere in there, maybe? So the day range is just simply the highest and the lowest point of the day that you're looking at. So again, I'm looking at this on a Saturday. So for the Friday, really it only shifted by $3 per share. Then you have the 52-week range, which is the exact same thing as the day range, but instead of it just being today, this is over the last 12 months. So what we can do is we can click the 1 year up here. So the highest number on this table should equal this 134.13. That's probably about right, but because of the size of the mouse, it doesn't quite hit that 13. And then the lowest point, which is probably either there. No, it might be here. It's somewhere in there. So in the last 12 months, the absolute highest it was is 134. The absolute lowest it was 102. Now let's talk about volume. Volume is simply the number of shares that changed hands in one day. So of the amount of shares that were bought and sold on Friday, there were 7.2 million. So volume is something you use just to see like how often people are trading these stocks. So right now, this one trades pretty often because 7 million shares are changing hands. And then the average volume is the same thing, but on an average day, how many shares change hands. So on average, about 9 million shares get traded, but on Friday, 7.1 was. So it's a little bit less than average. So what you can infer there was Friday was really an uneventful day. So because less than normal people traded. Most people just held on to it and said, let's see what's going on. And the next thing we have here is the market cap. Now, the market cap is short for market capitalization. And what that means is you take the stock price per share of the company stock and you multiply it by the total amount of company stock. So if there's 10 million shares of Walmart, it would be 10 million shares times 129. Basically what market cap is the amount of money you would need to purchase every share currently outstanding in the company for you to own all of it. And that would cost you about $366 billion. Alrighty, and then we have beta. Beta is a really complicated term. It's something we use in finance that is honestly more complicated than probably everything else on this screen. To be as simply as possible, beta is a comparison of risk between whatever company or fund you're looking at against quote-unquote the market or the general stock market. So it's rated on a scale at which a beta of 1.0 means the company or fund you're looking at has the same amount of risk as the general market itself. And then the numbers go up or down to show if it's more risky or less risky. This beta, this 5-year monthly, there's almost an infinite amount of ways that you can calculate beta. There's a bunch of different ways you can do it. They're just saying that the way these guys calculated it is over a 5-year period with monthly measurements. So that's not really important. really just the beta matters, because no matter how you do it, they're going to be ballpark around the same. Sort of like how you have 3 different credit scores, even though you have the same history with all 3 of them. It's just different ways it's calculated. So ballpark, they should all be about the same. But in case you're curious, that's the method they use to get it. So we already said that it's a comparison of risk from the company or fund you're looking at versus the market. So this 0.3, that 0.3 is less than 1, which means the risk of Walmart is less than the risk of the market. Meaning if you think something's going to go wrong in the market, this might be considered a safer place to have your money because this number is less than 1. Next thing we have is the PE ratio. Now the PE ratio, sometimes it just says PE like that, and sometimes there's a slash in between the P and the E, and that's because it's a fraction. It's the price per share that you pay divided by the earnings per share of the company. So what does that mean? What that means is you are paying for every dollar per share that Walmart earns, what you are paying for in the price is $24.61. So let me say that one more time. For every dollar that Walmart earns per share, you are paying $24 per share to purchase that $1 a year in earnings. So it's a simple fraction. Let me go ahead and get up a calculator here. And let's go ahead and play with that for a second. So this fraction is 24 to 1. So it's 24 divided by 1, and we have that. So if we take our 129.40 and we divide that by 24.61, bet you that earnings per share is $5.25. Oh, here we go. Earnings per share, $5.26. So what this is, nope, 25.8. Okay, so it rounds up to 5.26. So what the PE ratio is, how expensive is the earnings of the company for you to purchase? Because as a shareholder in the company, you have a right to the income and the assets of the company. So how much is that income costing you? And what this is mostly used as a comparison between companies. So if you have Walmart at 24.6 and Walmart makes $5 a share, let's go ahead and be close. So Walmart makes $5 per share, and let's say Target also makes $5 per share. If Walmart's PE is 24 and Target's is 30, well, what happens is for the same earnings, you're paying $30 for Target, but $25 for Walmart. So for the same amount of earnings, you are paying less money to own Walmart than Target. Now, unfortunately, I'm just going to leave it there. I'm going to explain this a lot more in the podcast episode because PE is a very hard topic for a lot of people to get their head around. I know it took everyone in my finance class quite a bit of time, but eventually you get used to it. It's the cost to own the company divided by its worth, or how much it's earning you. So it's a price of how expensive the earnings of the company are. All right, now let's move on to earnings per share. Earnings per share is pretty simple. If you owned one share of the company, how much money per year is the company earning for your share? If you own one share of stock, say that's 1/billionth of the ownership of Walmart. If Walmart earns $1 billion and you own 1/1 billionth of the company, then your portion of the earnings is $1. So all that is you just take the earnings, you divide it by the amount of shares outstanding, and so for your portion of the income of the company is $5.26. For this TTM is trailing 12 months. So going back 12 months, that's what it would be. Alrighty, and then the earnings date, this is simply when's the next time that they're going to report their earnings to the public. Because again, publicly traded companies, every quarter or every 3 months, they have to release to the world, really, how they did. Alrighty, and then we have the forward dividend and yield. Dividends, I believe we talked about, but dividends are basically the portion of earnings that the company goes, hey, we earned this much money, so we're going to give you, as the owner, some cash. Now, there's an interesting relationship between the earnings per share and the dividend. So if you owned one share of Walmart for the last 12 months, your share earned $5.26. Of that $5.26, the company determined that they were going to pocket $3 and change, determined they were going to pocket $3 and change, and that they would pay you $2.16. So for every share of the company, they kept $3 of this $5 of earnings, and they gave 2 of it to you. So a way that you can infer it is, you know what, let's be funny. Let's go ahead and do this. So of the, let's see, 216 divided by 5.26. So of all the money that Walmart made last year or over the past 12 months, 41% of it was given to you as the shareholder. So you got that 40%, and then they kept the 60 so that they can, continue operations, give their employees pay raises, develop new products to fight Amazon, all that good stuff. And then you have the yield. The yield is simply the dollar amount in dividends that you got divided by the current price of the company. So just for fun, we have $2.16, because that's what you got over the last 12 months, divided by 129.40. See that? 1.66%. Well, I guess I could have rounded up, but still. Now, keep in mind, something I think I forgot to mention is that this is the dividend over the past 12 months. So if that was the 12-month dividend, you got to keep in mind they're going to pay these out quarterly, usually. So we have 216 divided by 4. So every 3 months, you'd earn about 54 cents in dividends for the company. The next one is the upcoming ex-dividend date. And what the ex-dividend date is that they pay out dividends every quarter. But because these shares are trading every day, I mean, on average 9 million per day, they need to nail down a certain time, okay, who is getting this dividend? So the ex-dividend date is the date where they go, okay, if you own the company today or before today, here are the people who get the dividend. So if you want the next dividend, which is, 54 cents that we had? 54. Then you need to own the company before or on this day, and then you get the dividend. Now, the payment date is probably going to be a month after this, but this is the date that they basically lock it down. These are the people getting the dividend. And then since this video is probably going on a little bit longer than I intended, let's just talk about this one next. The next one we have is just the 1-year target estimate, which is just Yahoo Finance talked to a bunch of analysts. The analysts came together and said, okay, based on everything we know right now for the company and all you people with fancy degrees and educations, all that good stuff, where do we think Walmart is going to be in the next year? So right now they're at 129.40, and they think in 12 months they're going to be at 137, which really isn't that much. Let's go ahead and let's see, 137.58, and we're going to subtract that by the current price. So they think that Walmart over the next 12 months is going to go up by $8 per share. Now let's go ahead and divide that by its current price. So over the next 12 months, the analysts all agree, basically, that the stock price is going to go up 6.32%. Right, let's go ahead and just do this, make this easy. So the analysts in general agree, or that's what they think anyway. There's no way to really predict the future here because people can buy and sell however they want and go as crazy as they want. So everyone thinks, on average, that the company is going to go up by 6.32% over the next 12 months, and you're also going to get about a 1.66% dividend yield. Now, keep in mind, this number is based on the current price. So if the price drops by $30 a share tomorrow, or rather on Monday, then this dividend percentage is going to go way up because you're still going to get that 54 cents, but it's 54 cents divided by the current stock price. And since the stock price went down, the yield is going to go up, but that doesn't mean you get paid more. That just means you're paying less for that dividend, if that makes sense, because the share price went down. So you still get that 54 cents, but it's cheaper to buy a share to get that 54 cents. Alrighty, guys. So for those of you that stuck around for the ending, I greatly appreciate it. Thank you all so much for sticking with me so far. Be sure to share this video with friends and family if you think they'll get some value out of this. I have a lot of fun making these videos for you. If you have any comments, concerns, or suggestions for future episodes, feel free to shoot me an email. That is mainstreetfinance@gmail.com. There's going to be a link in the description there. Be sure to look out for the future podcast episode where I'm going to go much deeper into beta, PE ratio, and the earnings per share, as well as touch on the rest of these here. And if y'all are interested in a future video where maybe I go through all these other tabs and we just go through and talk about what else you see when you're researching companies, feel free to reach out and give that to me. Until then, I'll see you guys next time.